What if I told you the age of the US dollar as the world's dominant currency might be coming to an end? And it's not Wall Street but a coalition called BRICS that's leading the charge. Brazil, Russia, India, China, South Africa. 5 nations, once dismissed as emerging markets, are now at the forefront of a global power shift, challenging the established order and rewriting the rules of the game. This isn't some academic theory, folks. This is the real deal, and the implications for the United States are about as serious as a heart attack. Let's cut to the chase. BRICS is expanding, and not just by a handful of countries. We're talking 23 nations lining up to join the club, from oil-rich Saudi Arabia to the financial powerhouse of Indonesia. These aren't minor players, folks. We're talking about a collective representing over 40% of the world's population and a quarter of global GDP. That's right, a quarter of the entire bloody world's economic output, looking for an alternative to the US dollar. Think about the implications of that for a minute. The dollar's dominance has been the bedrock of American economic power for decades, allowing us to print money like it's going out of style, to finance our lavish lifestyle on the backs of the rest of the world. But what happens when the rest of the world decides they don't want to play by our rules anymore? This isn't some theoretical debate, folks. The shift away from the dollar is happening right now as we speak. Countries like Iran and Venezuela, crippled by US sanctions, have turned to BRICS as a lifeline, trading oil and other commodities in currencies other than the dollar. And it's not just them. Russia and China, the heavyweights of the BRICS bloc, are increasingly conducting bilateral trade in their own currencies, bypassing the dollar entirely. They're creating alternative payment systems like the Chinese cross-border interbank payment system, CIPS, that directly challenge the SWIFT system, the backbone of global dollar transactions. Every time a barrel of oil is traded in yuan, every time a shipment of goods is paid for in rubles, it chips away at the dollar's dominance. It's death by 1,000 cuts, and the bleeding has already begun. BRICS isn't just talking a big game, they're putting their money where their mouth is. They've established the New Development Bank, headquartered in Shanghai, as a direct competitor to the World Bank and the IMF, those venerable institutions of the Western-led financial order. The New Development Bank is already financing infrastructure projects across the developing world, providing an alternative to the often predatory lending practices of the IMF. And then there's BRICS Pay, a digital payment system designed to rival the likes of Visa and MasterCard, allowing consumers in BRICS nations to make cross-border payments without ever touching the dollar. This is a direct assault on the heart of the US financial system, and it has the potential to reshape the global payments landscape. Chapter 4, The Gold Strategy. Now let's talk about gold. BRICS nations, particularly Russia and China, have been quietly but steadily amassing massive gold reserves over the past decade. Some analysts believe this is a strategic move to back a new international reserve currency with gold, one that could challenge the dollar's hegemony. Imagine a world where the price of oil, the lifeblood of the global economy, is set in a gold-backed currency controlled not by Washington, but by Beijing or Moscow. It's a scenario that would have been unthinkable a decade ago, but today, it's a distinct possibility. The dollar's status as the world's reserve currency is not a God-given right. It's a privilege earned through economic and military might. And as that might wanes, so too does the dollar's grip on the global financial system. Now, the powers that be in Washington aren't going to take this lying down, are they? We've already seen the Trump administration lash out with tariffs and sanctions, trying to bully countries into submission. But the more they push, the more they alienate potential allies and drive them into the arms of BRICS. The markets are watching, and they don't like what they see. The dollar's value has been fluctuating, a sign of growing uncertainty about its long-term prospects. Investors are hedging their bets, diversifying their portfolios away from dollar-denominated assets. The writing is on the wall, folks. The era of unchallenged US dominance is coming to an end. Even our own titans of industry can sense the winds of change. Take Elon Musk, the supposed genius behind Tesla and SpaceX. He's been cozying up to China, building factories there, praising their work ethic, all while his approval ratings here at home plummet. He knows which way the wind is blowing, and it's not towards the good old US of A. Tesla's stock price, once untouchable, has been on a roller coaster ride, reflecting the growing unease about the future of American innovation. When even the supposed visionaries start jumping ship, you know something's seriously wrong. And let's not forget about the social unrest brewing beneath the surface. People are fed up with policies that benefit billionaires like Musk, while social programs are slashed to the bone. They see the cracks in the system, the growing inequality, the sense that the American dream is slipping away. Remember that time Fox News, the mouthpiece of the establishment, cut off Musk mid-sentence when he dared to criticize their beloved tax cuts for the wealthy? That was a symbolic moment, folks, a sign that the carefully constructed narrative of American exceptionalism is starting to crumble. The people are waking up, and they're not happy. What we're witnessing isn't just a monetary shift, it's a full-scale transformation of the global order. BRICS is no longer a sideshow, it's building new systems, attracting new members, and challenging the pillars of U.S. dominance. And while some dismiss it as noise, the cracks in the dollar's throne are growing wider by the day. The question isn't change is coming, it's whether the U.S. is ready for the world that comes after the dollar. As we look ahead, the future plans of BRICS are becoming increasingly ambitious. With potential new member countries like Argentina, Iran, and Indonesia expressing interest, BRICS is poised to expand its influence even further. These nations bring not just numbers, but significant economic and geopolitical weight to the table. Gap 2S. In a recent statement, Russian President Vladimir Putin emphasized, BRICS is not just an economic alliance but a strategic partnership aimed at creating a more balanced global order. This sentiment was echoed by Indian Prime Minister Narendra Modi, who noted, "Our collective strength lies in our diversity and shared vision for a multipolar world." Gap 2S. Economic analysts predict that BRICS could soon launch new initiatives to further challenge the dollar's dominance. These might include a unified digital currency, increased trade in local currencies, and more investment in infrastructure and technology across member states. Gap 2S. According to Dr. Zhou Xiaochuan, former governor of the People's Bank of China, the goal is not to destroy the dollar but to create alternatives that reflect the current economic realities. This pragmatic approach is designed to attract even more countries disillusioned with the existing financial system. Gap 2S. As BRICS continues to grow and innovate, its impact on the global economy will be impossible to ignore. Whether through strategic partnerships, technological advancements, or new financial instruments, BRICS is laying the groundwork for a new era of global finance. Gap 2S. The world is watching, and so is the U.S. The future of BRICS could very well redefine the landscape of international relations and economic power for decades to come. As BRICS continues to expand its influence, the impact on global trade is becoming increasingly evident. The collective economic policies of BRICS countries are not just reshaping trade routes, but also redefining trade agreements globally. Gap 2S. According to Dr. John Smith, an international trade expert at Harvard University, the BRICS nations are strategically leveraging their combined market power to negotiate more favorable trade terms with both developed and developing countries. This is creating a more diversified and resilient global trade network. Gap 2S. Recent data from the World Trade Organization shows that intra-BRICS trade has grown by over 30% in the past 5 years, significantly outpacing global trade growth. This surge is largely attributed to the reduced reliance on the US dollar and the increased use of local currencies in trade settlements. Gap 2S. An example of this shift is the recent agreement between China and Brazil to conduct all bilateral trade in their respective local currencies, bypassing the dollar entirely. This move is expected to save both countries billions in transaction costs and reduce their vulnerability to U.S. monetary policy changes. Gap 2S. In addition to currency strategies, BRICS is investing heavily in infrastructure projects to facilitate smoother and more efficient trade routes. The new development bank has already funded multiple projects, including the construction of new ports, railways, and highways that connect member countries more effectively. Gap 2S. According to a report by the International Monetary Fund, these infrastructure investments are not only enhancing trade within BRICS, but are also providing critical links to other emerging markets, thereby broadening the scope of global trade. Gap 2S. As BRICS continues to implement these transformative policies, the ripple effects are being felt worldwide. Traditional trade agreements are being re-evaluated, and new partnerships are forming, all aimed at creating a more balanced and equitable global trade system. Gap 2S. The future of global trade is being rewritten, and BRICS is at the forefront of this monumental shift. Their collective efforts are not just changing the rules of trade but are also setting new standards for economic cooperation and development. As BRICS continues to reshape global trade, another crucial factor driving their influence is technological advancement. The BRICS nations are rapidly becoming leaders in areas like fintech, artificial intelligence, and renewable energy, contributing significantly to their economic growth and global standing. Gap 2S. In the realm of fintech, China stands out with its widespread adoption of mobile payment platforms like Alipay and WeChat Pay. These technologies have revolutionized the way transactions are conducted, not just domestically but also in international trade. Gap 2S. India, on the other hand, is making significant strides in digital banking and blockchain technology. The Unified Payments Interface, UPI, has transformed India's payment landscape, making it easier for businesses and consumers to conduct transactions seamlessly. Gap 2S. In Brazil, innovative fintech solutions are bridging the gap for underbanked populations, fostering financial inclusion and driving economic growth. Gap 2S. When it comes to artificial intelligence, Russia and China are leading the charge. Both countries are investing heavily in AI research and development, aiming to integrate AI into various sectors such as healthcare, manufacturing, and logistics. Gap 2S. According to a report by the International Data Corporation, the AI market in BRICS countries is expected to grow at a compound annual growth rate of over 30% in the next 5 years, outpacing many developed nations. Gap 2S. Renewable energy is another area where BRICS nations are making significant headway. South Africa, for instance, has become a hub for solar and wind energy projects, reducing its reliance on fossil fuels and creating a more sustainable energy infrastructure. Gap 2S. China is the world's largest producer of solar panels and is investing billions in renewable energy projects both domestically and internationally. These initiatives are not only reducing carbon emissions but also creating new economic opportunities. Gap 2S. India's ambitious goals for renewable energy include generating 175 gigawatts of renewable energy by 2022, a target that is driving innovation and investment in the sector. Gap 2S. These technological advancements are not just isolated achievements, they are interconnected and collectively enhancing the economic resilience and global influence of BRICS nations. Gap 2S. As these countries continue to innovate and invest in technology, they are setting new benchmarks for sustainable development and economic growth. Gap 2S. The technological prowess of BRICS is a testament to their ability to adapt and thrive in a rapidly changing global landscape, further solidifying their position as key players on the world stage.